Good afternoon. I'm Christina Benagi. I've been with Vrakas for 23 years. I started out doing the financial statement side of things, audits and reviews, and now I manage our small business accounting department. We can do so much more than just the typical tax return. We can serve as a resource for your accounting staff when they have questions. We provide bookkeeper oversight. We look over financials for questions and comments in that. We can perform month-end close work for you. We provide a level of outsourced controllership, help with training on month end. We can also train on day-to-day depending on the software and if we have knowledge of it. We also can assist with discussions with owners or management on understanding the financials versus just looking at the net income or loss. On Sage 100 clients, I've assisted with bank reconciliation projects and doing month-end close work, mainly just the bank reconciliations, journal entries, and going through the financials. So unfortunately, I don't work with Sage 100 on a daily basis, and I've never used all of the parts of it. So if you have more specific to Sage 100 questions, I may have to have our consulting team for the Sage 100 help answer those. So at the end, if you want to email any of those type of questions to me, I can certainly share those with them. My presentation is generally software generic with some Sage 100 specifics to it. So I'll go ahead and share my screen and we'll get going. All right, hopefully you can all see the presentation now. So just want to talk a little bit about how our small business accounting services can provide you with support. As I mentioned a little bit ago, we provide various types of accounting assistance. We don't take a cookie cutter approach. We provide what's necessary for you. A good example of that is we do compilations for many clients that might need them for the bank, but we don't just automatically do monthly compilations just because that's kind of our cookie cutter approach. There are some firms out there that do that. So we try to, give you the most bang for your buck, and it's not in getting you a formal statement that you don't need. It's helping you with the financial statements. We also do Sage 50 support, which is the old Peachtree name, if you're more aware of that, as well as QuickBooks support, outsourced controllership, and of course, tax returns. So one of the things that we can help with the most is month-end close improvements. Even if we're not doing it for you and you're doing it on your own, there's always improvements that can be made, whether it's in the timeliness, the accuracy, making sure a commentary gets written, making sure those procedures are documented. So if COVID comes along and there's unexpected absences that happen, can things keep humming along as normal? And cross-training would help with that as well if there's personnel for that to be possible. We like to take a balance sheet approach, I call it, to the month-end close. And what that is, if you validate that all the balance sheet accounts are accurate, that basically means your profit and loss or your income statement is accurate. And maybe you have something between expense accounts, categorized incorrectly, but the net income, the bottom line would be accurate. As I mentioned, the main accounting goal is to have periods close timely so management and ownership can have accurate financial data to make decisions. Documenting this financial close is important. We'll talk a little bit more about that later. And we like to take this balance sheet approach, which helps with the accuracy. So first of all, one of the things most people do first anyways is getting that bank reconciliation done. First, it is important for someone to monitor the online banking regularly, at least weekly, if not daily, to watch for irregular disbursements. If there's oddities, questions should be asked. One, this lets individuals initiating the disbursements know that you're paying attention. And two, you'd catch a fraud issue faster. And many of the banks have a time limit of when you catch something, whether or not they'll take responsibility or now you need to eat your losses. So it's best to catch those sooner rather than later. There's also many examples of those, faked owner emails telling bookkeepers to wire money somewhere. Or a new one I've heard is faked employee emails asking the bookkeeper to change their direct deposit account for their paycheck. You must be careful and always make sure that that anyone initiating disbursements calls or talks to the owner or employee to confirm these changes or wires so that no fraudulent monies get out of your hands. Also, be sure to set wire and ACH controls with the bank internally and consider using a positive pay program with your bank. So of course, if you monitor these online transactions throughout the month, there really shouldn't be any surprises when you get to doing the bank reconciliation. Again, the sooner you do it, the better. You'll get your month-end close faster and catch any of these errors, which could be on the bank's dime versus yours, any of these fraud or errors that happen. I have seen an example where the bank cleared the same check twice. Once when an employee deposited it via their phone, and again when the employee took the check in person to the bank. In my mind, that's the thing the bank should catch. But again, if you don't catch it fast enough, they may or may not say that they're on the hook for that. Hopefully their controls get better as more and more people are doing those types of deposits on their phone. So most of us get excited when the bank reconciliation has a $0 difference. But don't proceed forward too fast. One of the biggest pitfalls we see in bank reconciliations is that there's transactions that are left outstanding that aren't truly things that are ever going to clear in the next month or so. Examples here might be you reissued a lost check but forgot to void the original check. You could have made in Sage 100 the special bank adjustment transactions. Maybe you made one twice by accident and left one outstanding. Or if there's deposits that haven't cleared, those could be something like a credit card deposit that hasn't come through yet. Or maybe it's an error transaction, right? Because deposits really should all clear within, a couple days or whatever. So it's best to not proceed when leaving those transactions outstanding that are things that need corrections or adjustments made. You want those made timely when the void check happened or whatever, not 3 months later when you decide to clean up those outstanding items and wonder why they're still out there. So Sage 100 specific, when you're doing a bank reconciliation, something to remember is Sage 100 doesn't recognize journal entries in the bank rec module, and you have to do either what's called a transaction journal entry or a separate bank reconciliation adjustment to capture those entries. It's especially important when you're done with the bank rec to make sure the calculated balance on your bank reconciliation report actually agrees to the GL. So you're almost reconciling three things, the bank and the bank rec module, but then also the general ledger balance for the bank account. And the reason the general ledger could get off is you could have made a journal entry to the bank account that wasn't something that you used in the reconciliation module. And you need to keep those all in sync. If you're off, it's always good to look at the GL detail for journal entry transactions. And any that are there, make sure they have a bank reconciliation adjustment or a transaction journal entry on your bank reconciliation. Also, be sure that you've printed your bank reconciliation report properly to only show transactions through the month end that you're working on. If you don't specify an end date, it will print, say you're doing an August reconciliation, it will print September transactions on there. Well, those aren't in your GL in August. So that would make that, it would cause a discrepancy when comparing that calculated balance to your general ledger. So you always want to print it with an end date of the month end that you're reconciling. To speed up timeliness in the bank reconciliation area with your month end close, you can be sure to use an online statement versus waiting for a mailed statement, so you don't have to wait a week or so to get that statement, especially with the post office timing slowing down these days. Also, if you use a third party for payroll or anything else that you need to usually enter at the end of the month, well, you get those payrolls during the month. You don't have to wait till month end to get those entered. You can get those entered as they happen. I've also seen some clients who essentially reconcile their bank account every week. So if you're bringing up the online activity every week, you can go ahead and start clearing those transactions in your Sage 100 bank reconciliation module. So when you get to month end, you're really only clearing, the last few days or week of the month. And you don't have to print the report, just keep saving that reconciliation in progress. Also keep in mind that you want to reconcile not only your main checking account, but also any additional checking accounts, saving accounts, money market accounts, just to keep them all in line monthly as you go through the year. So after cash, the next most common item in your balance sheet is accounts receivable. Typically I say to make sure that AR aging matches the general ledger, but Sage 100 specific, you want to make sure your AR trial balance matches the general ledger and the AR aging. There's kind of a three-way report check there. Because you can control a posting date different than an invoice date, this is where you can have differences occur between those various reports. At times it might be just fine, but just understanding how they reconcile and what the differences are is important. The accounts receivable aging is what's invoice date driven, and the general ledger and trial balance reporting are posting date driven. Sage 100 also allows journal entries to be posted to accounts receivable. So if you ever have differences, that could be one of the reasons as well. Typically, you don't really want journal entries as a common occurrence to the accounts receivable, but I understand at times there might be a need for one. If you're off, we recommend you can check these balances weekly or daily. Just make sure that all the items are posted before you do your comparison of the reports. You don't want to have batches that are out there and open that might be changing balances once they're posted. That will help you narrow down if you have a problem with these reports not matching, if you narrow down the time frame to checking it every day or week versus just once a month. Now, typically you won't have a problem and you can just do it on a monthly basis. But if you run into problems, that's one way to narrow things down. Also with accounts receivable, something to make sure your financial statements are accurate throughout the year is make sure someone's addressing old outstanding items. Whether you're sending statements, making calls, doing any necessary write-offs or addressing any unapplied credits, just to keep that accounts receivable listing clean and up to date. And this is one of the things you don't have to wait till month end to do. It's something that can be done during the month. So when you get to month end, it's already taken care of. Next biggest item on the balance sheet would be inventory. Here again, you want to make sure that your trial balance and your balance sheet or general ledger match, as well as taking a look at the inventory valuation listing. The inventory valuation report is time sensitive, so you want to make sure that you're really printing out a lot of these reports right at the last day of the month, so that if there is any time sensitivity, you're not running into issues. You'll want to review the listing for accuracy. Even if the trial balance and the listing agree, if you have negative quantities in your listing or incorrect costing, unit costs, you're really not giving out good information on the financial statements. So you really should review that listing for accuracy. If you do see negative quantities, Sage 100 does have a negative tier process that you can run for instances where you may have entered the receipt of goods after you already did the invoice to the customer. It'll kind of try to capture some of those. It may not capture everything, so you absolutely still want to look through and make sure there's not negatives still left in your listing. A common way that the unit costs get off, I've seen a client where it's unit of measure issues. Let's say you may buy it in rolls, but sell it in feet, and then they may do some cycle counting and use the wrong unit of measure, or they did the wrong quantity when doing the receipt of goods, things like that. So it's good to watch those unit costs as well to make sure they make sense too. It's also important to keep your financials accurate to do some sort of physical or cycle counting, whether you do an annual physical count to catch any errors there, or there's cycle counting processes that can be done as well, which means you're just counting some of the items, every week, so that hopefully throughout the year, at least once you get through all the items being counted at some point in time. I have seen clients where there's kind of a cheating done here, and they just pick which items they want to cycle count, the easy ones, and then some of the items never get counted. So you kind of want to make sure whoever's doing the cycle counting isn't cheating on that process. Another thing to consider in the inventory is, are there obsolete items in there, or items you're never ever going to sell? Those, you don't want to keep those accumulating on your inventory over years and just have this inflated value sitting on your balance sheet. So if there are things that are never going to sell, are expired, anything like that, those should be addressed and removed from your inventory as well, at least once a year. But again, doesn't have to be something to be saved to the end of the year. You could kind of work that as things occur through the year or at a certain point each year. Prepaid expenses. The most common examples here are prepaid rent, prepaid health, prepaid liability insurance, or you can have annual dues or subscriptions that are being expensed over 12 months that they cover. It's a good idea to have a spreadsheet to show which things make up your prepaid expenses, and to kind of give you a tracking to show you, hey, at the end of this month, this is what my balance should be if I'm recording a month 1/12 of a certain expense through the 12 months of that subscription. One way to keep things more efficient on your month end in the prepaid area, let's say you have prepaid health insurance and you every single month record the bill for your premium that's for the next month. So you're always 1 month prepaid. In that case, instead of changing that prepaid balance every single month, but your health insurance is always approximately the same amount every month, not any huge swings, you could record a prepaid, at December, and just kind of let that prepaid ride until the next December if there's no big variances in what that prepaid would be each month. Saves you on some journal entries there. And you could do that also in other areas if it's applicable, where it's a kind of a consistent prepaid all the time. Another thing you can use that's handy with prepaids is a recurring journal entry. Let's say you have an annual subscription. Every month you're going to take $1,000 to expense of that annual $12,000 bill. So you could set up a recurring entry, so it's just kind of always an automatic $1,000 entry taken care of. For rent, one thing to consider, I've seen clients, sometimes people are really consistent, and the end of a month, they always record the rent bill for the next month. But I've seen some clients where maybe they recorded at the end of the month, 1 month, but the following, different month, they recorded at the beginning of the month, the rent is for. If you don't do that flip-flopping, it's a lot easier because you can just leave that one prepaid rent amount out there and let it ride. But if you're always flip-flopping, whether it's actually prepaid or not, depending on when you decide to enter the bill, that causes you a little more work, a little less efficiency. Fixed assets. For depreciation, we suggest that you do a monthly estimate entry and then just an annual true-up, which shouldn't be that significant if you've recorded something all throughout the year. Some places really only do one journal entry at the end of the year, but in my mind, that kind of deceives anyone who's looking at your financials throughout the year, because all of a sudden you have this one big expense at the end of the year versus having, 1/12 of that amount throughout the year. So even if that monthly amount isn't perfect, at least an estimate, whether it's based on the past or if we track your fixed assets in our office, we can give you, what, based on the assets you currently have, what that depreciation would be for a new year. Then if you happen to have significant asset purchases during a year, say you build a new building, you move, you just have a lot of new machinery replacements, it would be wise to get the fixed asset software updated during the year and kind of start capturing extra depreciation so there's not a big surprise again at the end of the year. It also makes your year-end close go a little faster because you've already got that fixed asset stuff all kind of caught up instead of having to start from scratch and get the whole year updated. Another pitfall that I see in the fixed asset areas, oftentimes bookkeepers might, let's say you have an office equipment fixed asset account. They may accidentally put something in there that they meant to office supplies just because the account name starts similarly. Or they might put something under office equipment that was just a $500 purchase. And that amount is probably too small to be considered a fixed asset. You would really want to expense that. So it's really good throughout the year to watch those fixed asset accounts and see if there's anything that got posted in there that should have been expensed instead. Another thing to keep up throughout the year in the fixed asset area is disposals. When you dispose of something, it would be good to record that right away so that you don't have to kind of backtrack at the end of the year and try to remember what was disposed of or sold. Amortization, if that applies for you, it's another area where you could do a monthly entry, just like for monthly depreciation, and have a spreadsheet that kind of tracks where your balance should be, just decreasing by that monthly amount every month. So it's an easy glance at the end of the month to look at your balance sheet and check that your amount matches your spreadsheet. If you happen to have intercompany balances, one of the things here you want to make sure is that the due to on one company matches the due from on the other. It's way easier to catch those things as you go along throughout the year than just having kind of a big tangled mess at the end of the year to try to reconcile between them. When we get to the liability side of the balance sheet, accounts payable, here very similar to the accounts receivable. In Sage 100, you want to make sure that AP aging matches the general ledger as well as the AP trial balance. Now, just like I said for accounts receivable, because in Sage 100, you have a posting date as well as an invoice date, which can be different months. This might cause a difference between your AP aging and the trial balance. And as long as you understand what that difference is, it might be just fine. Let's say you got an invoice from a vendor dated September 30th, but you didn't receive the product until October. You could certainly post that as an October transaction with a posting date of October, but your invoice date can still be listed as September. What that will do is you will see your accounts payable aging won't match the general ledger. But again, if you print your reports all timely and know what that difference is, it might be just fine, or you might find errors where you did use incorrect dates on accident. Sage 100, as I said, with accounts receivable, does allow journal entries to be posted to accounts payable as well. So typically not the best idea, but at times you may do something that's a reversing entry just to capture something for timing. But if you are ever off, that's one place to look is print out your general ledger detail and look if there's any journal entries in there. Just like with the accounts receivable, again, make sure you keep that accounts payable aging clear throughout the year, throughout the month, addressing any old outstanding balances, whether you're just choosing not to pay it yet is just fine. But if you've got things out there, you're never going to pay for some reason, or you have already paid and maybe the bill was entered twice or whatever, you want to clean those up as they occur. It'd also be a good idea if you've got a couple major vendors to actually reconcile to a statement that they send on a regular basis, just to keep things reconciled that way so you have no problems to deal with down the road. If you have a credit card and you happen to, pay a vendor bill on the credit card, you do want to make sure that that vendor bill gets transferred to the credit card vendor so that it doesn't just keep building up and show as payables that you end up not paying under those vendors because you've recorded it separately under the credit card and you've essentially duplicated it. If you need any help with that process, our Vrakas computer consulting team could certainly help you get that set up as well. I think I skipped by the, oh no, not yet. The unvouchered accounts payable is really your purchase order clearing report. That report, again, is a little more time sensitive, so you'd want to print that purchase order clearing report right at the end of the month. And what that report does for you is when you receive goods, but you haven't received the vendor bill yet, it reflects that liability for you. There's many systems where accountants have to try to decide how long do I want to leave the month open to wait for any last vendor bills that are coming in. Well, with Sage 100, having that PO clearing report that records a liability for you once you've entered the receipt of goods, that keeps you from having to hold the month open for that. However, you do need to make sure you keep that purchase order clearing report clean. I've seen many places where, whether it's from typos or of the quantity received, or whether it's unit and measure issues, they may have said they received 100, but the PO was for 1,000, and then it hangs out there on that purchase order clearing forever until you do something to clear that off that list. There may also be, maybe they didn't ship in full, but you're never going to get the last 10. Well, that's going to sit out there like expecting, waiting for that. Or let's say they decided to bill you for 900, even though you got 901. Those kind of things you want to make sure you address and keep that listing clean, so it doesn't get to be 20 pages long. Accrued wages and PTO. If we're doing a gap or accrual statements, we really should be reflecting these items. A lot of times there might be some clients out there, maybe you're kind of a little more not full accrual basis, but it is really best to reflect accrued wages at the end of each month. And that's if you are a biweekly payroll. If you don't do an accrued wage entry, most months will have 2 payrolls, but then you'll have a couple months with 3. And it kind of distorts your financial statements. So that's the reason for recording those accrued wages, to match the expenses with when they occurred. So basically, if the last 4 days of the month weren't paid until the next month, because that's when the payroll happened, then you essentially usually use that payroll when it happens and say, oh, of those 10 days, 4 days or 40% belonged into, say, September. And you do an adjustment for 40% of that payroll to reflect that expense in September. It just keeps your financials a little more accurate. Now, one of this kind of more efficiency, speed up your month-end close tips I can give you is that if your payroll is relatively consistent from payroll to payroll, instead of taking 40% of that actual payroll that happens the next month, you could use the most recent payroll that already occurred and take 40% of that to use for your calculation of your accrued wages. It's just a timing factor anyway, so if it's not 100% exact, it's totally fine. That way it gets your month closed a little faster. Paid time off is important to, or accrued vacation is good to record as well. And at least maybe update this annually based on, how much time people have earned and not taken based on their actual wage rates. Otherwise, if you don't ever record that paid time off, and let's say someone leaves and now you're paying them out for 100 hours, now you'll have a big hit in that 1 month for all their built up paid time off that you're paying out. When it comes to the accrued wages, I forgot to mention, some people just use the gross wages and stop there. I think that's totally fine. You could also try to capture the payroll taxes. They're not as significant, but one way to shortcut and kind of capture the payroll taxes to go with your accrued wages is just take your accrued wage amount and add 7.65%. Then you're at least capturing the FICA taxes, and the unemployment taxes aren't that significant anyway. Some other accrued liabilities you might have might be accrued commissions. If you have commissions, it's best to reflect the commission expense in the month it was earned, even if you don't pay it for a month or longer later. It gives you a more true picture of the expenses related to the sales of the month. So depending on when you pay the commissions during the month, make sure you don't double up and accrue the commission separately, and then also accrue it with the accrued wages. Another expense that oftentimes I see clients just, kind of hit one time at the end of the year, it's kind of a big expense to hit in December, is accrued property taxes. If you have a property tax bill of $12,000, it'd really be best to, even if you don't know what that exact bill will be that next year, is to just accrue, 1/12 of what the previous bill was each, round it up a little bit. So if your bill was $11,500 for 2020, maybe in 21, just accrue $1,000 a month to build that balance up, so it's not a big hit in December. Accrued sales tax. Most systems will automatically post the sales tax to a liability account if everything is set up correctly. So each month, though, you can compare what the balance sheet shows to what you actually came up with that you're paying on your sales tax return. This does get more complex if you have multiple states that you pay into, and some are monthly or quarterly, but then maybe at least each quarter you can kind of check on that. One thing that doesn't always happen automatically in the systems is the discounts getting adjusted out of that liability balance. So at least periodically, you'd like to reduce that balance for any discounts that were taken. Another common item on the balance sheet is your line of credit. One of the pitfalls that we see here is a lot of people will record all their payments right against the line of credit balance, but oftentimes they're putting the interest expense against that line of credit liability, when in fact it should really go to the interest expense account. Easiest way to catch this each month, just check what the bank shows as your line of credit balance, compare it to your balance sheet, and make any of those necessary corrections. Notes payable, similar to the line of credit. Sometimes it's just because bookkeepers don't have the information, but a lot of times I see the entire payment reducing the note payable, when in fact a portion of it should really be going to interest expense again. If you aren't provided with the principal and interest split with each monthly statement or whatever, or a amortization from the bank, we can certainly assist you in getting an amortization made so that you can use that to reflect a portion as principal each month. And even if sometimes if we make an amortization schedule, depending on the exact day that you pay, the bank might have a slightly different amount, but you can always true up annually to their balance on the website, or you can use that monthly. But if it's like a capital lease where they don't actually have an online site for you to get a principal balance, that's where those amortizations can come in handy. Equity. One of the biggest things here is to make sure that your retained earnings at any point during the current year matches the prior year final financials or tax return. Sage 100 is better than other systems in that clients don't accidentally change the past years as easily. But we've also seen where tax accountants haven't always given year-end journal entries to the clients to make sure that things match. So it's always good to check yourself. If you have a distributions account, it's very common to have that account just show the distributions from the current year. So once a year, when you get to like a January 1st entry, you would want to zero out the distributions from the previous year against the retained earnings account. Another thing to consider in the equity area is make sure that any owner personal expenses are recorded as a distribution or draw, or that they're put into a due from the owner receivable account. They really shouldn't be putting personal expenses through the company, and those are two ways to acceptably record those payments of personal expenses by the company. Also, if the company lends money to employees, this should be reflected as an employee advance or employee receivable asset. And then if they make payments back via their paychecks or whatever, those can be bring that asset balance down with each payment. That kind of gets us through the main areas of the balance sheet. And like I said, if you kind of prove out each of those balance sheet accounts each month, you're really in pretty good shape with your financials. But there's a couple things I would say to still kind kind of check out on your income statement. And I would say the highlights would be check that your gross profit percentage is reasonable or consistent with the past, or if you expect it to be higher or lower, that it is. And it would also be good to look at any other significant fluctuation in expenses and make sure they're explainable and what you're expecting. We also like to look in the repairs, supplies, auto expense accounts, anything like that that could possibly have a fixed asset slip in there, or anything that should be capitalized. And of course, the miscellaneous income or expense accounts should really be kept to minimal balances. So once you get through that month end and you kind of go through that income statement for those fluctuations and things, I have on the screen here commentary. I think it's very helpful to so many owners where we have clients that take that extra, whether it's a half an hour or whatever it is, when you're kind of done closing the month, look over those financials and put together a little commentary. Here's what happened this month. Here's what's unusual. Our gross profit is high because of this, or our repairs expense is high because of this. Kind of answer those questions before they're asked by the owner or management who are reviewing those financial statements. That comes in really handy. Then, as I mentioned earlier, it's really important to document your procedures, whether it's not just for month end, but also day to day, or do cross training, especially with the COVID year or 2 years that we've had in the past. If suddenly somebody's out of commission for a week, are you able to keep things moving along smoothly? And I think the best way to be able to do that is have that cross training or step-by-step documentation of processes. It's always been important, but just seems extra important now. I used to say if someone won the lottery and decided to take off, make sure you can cover that position without a big gap and learning curve. So now it's be ready in case anyone gets sick. So I have here just a kind of a bad balance sheet we put together to kind of point out some other things to watch for when you're doing your closing work. First of all, one of the biggest things that is you don't always remember to look for because you kind of assume it will be fine. But if you look at the total assets and then you look at the total liabilities and equity, they're not the same. That's a problem. So there's a few different ways. Some softwares, this means there's maybe a data corruption error. Sometimes it might mean maybe this is a custom report and there's a new account that was used and wasn't added to this report. So always something to check into though if those don't match. You'll also see like accrued wages. It's a negative $2,000. Well, that's kind of strange because it's not like you'd have a receivable for wages. So probably means there's an error in a journal entry and there's something to look for. So whenever you see negatives on your liabilities section, something to look into. And then on the asset side, we have a negative $2,000 US bank number 1234. Well, that might be legit. It could just be that there's checks that haven't cleared and we haven't had to transfer money to cover them. A lot of times there might be a sweep account that covers things as they clear. So sometimes it can be legit, but always something to look at and make sure it does make sense. I also have a little profit and loss here, and it's a comparable showing 2021 versus 2020. So just wanted to point out here, like I mentioned earlier, it's a good idea to kind of check what's that gross profit percentage and is it reasonable and consistent with the past? Well, in 2020, our gross profit was 25,000 out of 65,000 of sales. But in 21, it's 65,000 out of 105,000 of sales. That's quite a increase in that percentage. So probably something to make sure it makes sense. Maybe you had a different product, mix of product sales. Maybe there was some improvements made, different things like that, but just make sure it makes sense. or that there's not an error in the numbers. Then it's always good to take a peek at your fluctuations between years. And one of the things I'd point out here for sure is, oh, we have no rent expense. And last year it was $6,000. Well, that's kind of an odd one to have no rent expense. So probably something to check into. However, it has happened before where the owners of this ABC company also own the building. Company's not having that great of a year and they decided not to charge any rent. So it does happen at times, but something to look into. We also have $6,000 sitting in Ask My Accountant account. Well, that's something to look into and try to get categorized in the proper place. And miscellaneous expense, $25,000 this year, $2,000 last year. Looks like we need to look in there as well and dive in and give those expenses a proper coding. So that should give you some ideas of some of the pitfalls from doing month-end close and some tips. Certainly, if there's something we can help out with, like I said, we do anything kind of tailored to your needs, right? So there's been clients we help a lot for a month or two and then kind of train them to do their thing and they're good to go from then on. Or maybe it's kind of an oversight role. Hey, we have this bookkeeper, I think she's pretty good, but sometimes she just has questions and could you serve as someone she could bounce those off of? Certainly something we can do. Some clients just fax us or email us financial statements and we take a peek at them and ask a couple questions. Sometimes owners appreciate kind of talking through financial statements, whether it's quarterly, monthly, to, you know, what should they know from them and as far as decision making, or how do they understand what's happening, any of those things. And of course, if there's compilations or reviews or audits needed, certainly something Vrakas does along with tax returns. So certainly reach out. My email address is on the screen there, but it's C-B as in boy, I-N-A-G-I @VrakasCPAs.com. And like I said, if there's any questions, I'll take a peek in the chat, see if there's anything there. But if there's any other questions, they can be emailed to me as well. And if it's something stage specific that I am not certain of, I will share with the computer consulting team to get back to you.